Everyone focuses on gold. Gold is the king of money. But silver? Silver is the king of industry. And right now, the king is missing in action. Let's set the scene. The United States is in a race, a desperate race to reindustrialize. The push for electric vehicles, the massive expansion of solar farms, the 5G rollout, the AI data centers sprouting up like weeds, all of these technologies share one common DNA. They require silver. Not just a little bit, a staggering amount. Silver is the most conductive metal on the periodic table. You cannot replace it. If you want high-efficiency electronics, you need silver. If you want a solar panel to actually generate electricity, you need silver paste. Silver is the most conductive metal on the periodic table. You cannot replace it. If you want high-efficiency electronics, you need silver. If you want a solar panel to actually generate electricity, you need silver paste. So, here is the setup. The former, and potentially future, president laid down a demand. Under the guise of national security and the USMCA review, the demand was simple. Canada must prioritize raw silver exports to U.S. manufacturing hubs at a fixed preferential rate, effectively bypassing the global spot market. It was a power move, a classic leverage play. The assumption was that Canada, economically tethered to the U.S., would fold. They always fold, right? Wrong. Ottawa refused. Citing resource sovereignty and existing contracts with Asian and European tech giants, Canada drew a red line. They stated that Canadian mines will not become a subsidized annex of U.S. industry. Now, why does this matter to you? Why should you care about a trade dispute between two friendly neighbors? Because the supply chain is a house of cards, and someone just turned on a giant fan. Let's look at the numbers. The world is already in a silver deficit. For the last 3 years, we have consumed more silver than we have mined. The Silver Institute has been sounding the alarm, but the markets ignored it. We've been eating into above-ground stockpiles. The warehouses in London and New York are draining. And now, the U.S., the world's largest economy, is being told it can't cut to the front of the line for the remaining supply from its closest neighbor. This is the perfect storm. Think about the solar industry. This is the biggest driver of silver demand right now. A standard solar panel uses about 20 grams of silver. That doesn't sound like much until you realize we are installing billions of them. The US wants to dominate this sector to compete with China. To do that, they need reliable, cheap silver. If Canada restricts flow, or if tariffs go up, the cost of producing energy in the US skyrockets. But it goes deeper. Let's talk about the defense sector. Tomahawk missiles, fighter jets, satellites. They are loaded with silver contacts because silver doesn't corrode and spark like other metals. It is reliable. In a war scenario, you don't want your guidance system to fail because you use copper instead of silver to save a few pennies. The U.S. Department of Defense calls silver a strategic material. Yet, the U.S. does not have a strategic stockpile of silver. They sold it all off decades ago. So when Trump demands access and Canada refuses, the Pentagon gets nervous. And when the Pentagon gets nervous, the market panics. I want you to pause for a second. Think about the device you are watching this on. Phone, laptop, tablet. It works because of microscopic connections made of silver. If the price of silver triples because of a trade war, the margins for companies like Apple, Tesla, and Samsung get crushed. But the real story here isn't just about prices going up, it's about availability going down. We are looking at a physical shortage. Let's walk through the logistics of this supply chain disruption. Mining is a slow, dirty, difficult business. You don't just flip a switch and get more silver. It takes 10 years to take a mine from discovery to production. 10 years. Canada is a mining powerhouse. They have high environmental standards, stable laws, and skilled labor. It is the safest place in the world to get your metal. If the U.S. can't get it from Canada, where do they go? Mexico? Mexico is the world's largest producer, but the political climate there is shifting. Nationalization of lithium is already on the table. Is silver next? Peru? Massive protests and mine shutdowns happen there regularly. China? Well, that's the competitor. We certainly aren't going to ask them for a cup of sugar. So, the U.S. is backed into a corner, and Canada knows it. This refusal is a signal. It's a signal that the era of easy globalized trade is dead. We are entering the era of resource nationalism. Every country is looking at their dirt, realizing it's worth more than paper currency, and locking the gates. If you're finding this breakdown valuable, hit that like button. It helps us get this information out before the mainstream news catches up. Now let's get into the mechanics of what happens next. the silver squeeze. When a supply chain breaks, it doesn't happen all at once. It happens in waves. Wave 1 is the spot price. Traders smell blood. They see the political tension. They start buying futures contracts. The paper price of silver disconnects from the physical reality. You might see silver jump 5–10% in a day. Wave 2 is the premiums. This is what you and I pay. You go to your local coin shop or online dealer, and suddenly they are out of stock. Or they have stock, but they want $10 over the spot price. Why? Because the refiners can't get the 1,000-ounce bars from Canada to melt down into coins and small bars. Wave 3 is the industrial panic. This is the scary one. This is when a CEO of a major electronics company realizes they only have 2 weeks of silver inventory left. They don't care about the price anymore. They place at-market orders. Buy it at any price. Just get the metal. That is when you see a parabolic move. That is when silver does what nickel did a few years ago. Prices doubling in days, exchanges halting trading, chaos. And Canada's refusal is the trigger for all of this. But we have to look at the political strategy here. Why would Canada risk the wrath of the US? 75% of Canada's exports go to the US. It seems suicidal, unless Canada knows something we don't. Maybe they know that the US needs them more than they need the US right now. In a digital green economy, he who holds the minerals holds the power. It's not about who has the biggest aircraft carriers anymore. It's about who has the neodymium, the cobalt, and the silver. This creates a massive leverage point for Ottawa to renegotiate other things. Lumber tariffs, dairy quotas, pipeline approvals. They are using silver as a hostage. And Trump, his brand is the art of the deal. But you can't deal with geology. You can't tweet more silver into existence. If he retaliates with massive tariffs on Canadian goods, it creates inflation in the US. Construction costs go up. Car prices go up. It hurts the American voter. It is a catch-22. I want to take you back in history for a moment. Let's look at the 1970s, the oil shock. OPEC decided to turn off the tap. The price of oil quadrupled. It caused a decade of stagflation, high inflation, and low growth. We are staring at a metal shock. Oil is the energy of the combustion engine economy. Silver is the energy of the electric economy. If you choke off the silver supply, the Green New Deal, the infrastructure bills, the EV mandates, they all hit a brick wall. Let's talk about the investment angle, because I know that's what many of you are thinking about. What does this mean for your portfolio? Usually when the stock market crashes, industrial metals go down because people think the economy is slowing. But silver is unique. It has a dual personality. It is an industrial metal, yes, but it is also a monetary metal. It is a safe haven. In a scenario where geopolitical tensions rise between the US and Canada, trust in fiat currency drops. People flock to hard assets. So you have two forces pushing silver up at the same time: industrial shortage and monetary fear. That is rocket fuel. I'm curious, do you own any physical silver, or do you stick to stocks? Let me know in the comments. I want to see how many of you are already positioned for this. Now let's dig deeper into the industrial nuance. The thrifting myth. Wall Street analysts always say, if silver gets too expensive, companies will just use less of it. They call this thrifting. Here's the truth. We have already thrifted as much as we can. Solar manufacturers have spent 20 years shaving off every microgram of silver they can from the panels. They have hit the limit of physics. If they use any less, the efficiency drops and the panel becomes worthless. Furthermore, silver is a tiny percentage of the total cost of a product. In a $1,000 iPhone, there might be a few dollars worth of silver. If silver goes from $30 to $100, the cost of the iPhone only goes up a few bucks. Apple isn't going to stop making iPhones. They will just pay the price. This is called inelastic demand. It means the buyers are not sensitive to price changes. They must have the metal, and Canada holds the keys to the vault. Let's look at the specific regions. The Silver Valley in Idaho used to be a giant producer. It's a shadow of its former self. But look at British Columbia, look at Ontario, look at Quebec. These regions are sitting on massive polymetallic deposits. When Trump demands access, he is essentially trying to annex the geology of the Canadian Shield. The response from the Canadian Prime Minister was uncharacteristically blunt. It signals a shift in the global order. The special relationship between the US and Canada is fraying. And let's not forget the environmental angle. The US administration wants these minerals, but they also want them clean. They don't want to buy dirty silver from unregulated mines in developing nations. They need ESG compliant silver. That makes Canadian silver the premium product. It's like organic food. You pay more for it. So if the US is cut off from the organic, ethical silver of Canada, they are forced to deal with regimes they sanction or criticize. It is a diplomatic nightmare. Now imagine the disruption on the factory floor. Let's say you are Ford or General Motors. You are pivoting to EVs. You have billions invested in battery plants. An EV uses up to 2 ounces of silver. That is huge compared to a gas car. Suddenly, your supplier calls. We can't deliver the silver contacts for the circuit breakers. The assembly line stops. You have thousands of workers standing around. You have billions in capital sitting idle, all because of a diplomatic spat over a metal that most people think is just for earrings. This is the fragility of just-in-time manufacturing. We built a world optimized for efficiency, assuming everyone would always be friends. We didn't build it for resilience. We didn't build it for a world where the US and Canada are in a trade war. And consider the speculative attack. Hedge funds are watching this. Algorithms are reading the headlines. Canada refuses. Supply chain halt. The algorithms will front-run the panic. They will buy silver futures, silver mining stocks, and silver ETFs. This creates a self-fulfilling prophecy. Prices rise, which creates headlines, which brings in retail investors, which drives prices higher. It's the GameStop mechanic, but applied to a critical commodity. But here's the danger. If the price goes too high too fast, the exchanges might change the rules. We saw this in 1980 with the Hunt brothers. The exchange raised margin requirements. They forced people to sell. If you are playing this game, you need to understand that the casino can change the rules if they are losing. That's why many experts argue for holding the physical metal. If you hold it, you don't have counterparty risk. If the US border closes to Canadian silver, the silver already inside the US becomes instantly more valuable. Let's pivot to the political fallout. If factories start closing or slowing down because of this shortage, who gets the blame? The US administration will blame Canada. They will paint Canada as an adversary. They are hoarding resources. They are hurting American workers. This rhetoric is dangerous. It stirs up nationalism. It could lead to actual border closures or strict visa requirements. The longest undefended border in the world could suddenly become a lot more complicated. And for Canada, the risk is isolation. If the US decides to punish them, they can hurt the Canadian economy deeply. It is a game of chicken. 2 cars driving at each other. Who swerves first? Canada is betting that the US needs the silver more than they need to punish Canada. It is a high-stakes gamble. Let's look at the recycling narrative. Some of you might be thinking, can't we just recycle silver? Technically, yes, but it is incredibly difficult. Because silver is used in such tiny amounts in electronics, recovering it is expensive. It costs more to get the silver out of an iPhone than the silver is worth. Most silver in electronics ends up in landfills. We are burying our future. So, we cannot recycle our way out of this shortage in the short term. We need mined supply. This brings us back to the mines. If prices explode due to this conflict, Canadian mining stocks become the belle of the ball. They will be generating massive free cash flow. But there is a catch: windfall taxes. If Canadian miners start making billions because of a geopolitical crisis, the government might step in and tax those profits. Or the US might sanction those specific companies. Investing in this environment is like walking through a minefield. The potential rewards are massive, but one wrong step and you lose a leg. So, what is the end game here? How does this resolve? There are 3 scenarios. Scenario 1, the US caves. They drop the demands for quotas, they offer other concessions, and they agree to pay market price. Silver prices stabilize at a higher level, and trade resumes. This is the rational outcome. Scenario 2, escalation. The US imposes tariffs. Canada retaliates by cutting off oil or electricity exports. Remember, Quebec powers a lot of the US Northeast. The conflict spirals. Silver goes to $100 or more. The global economy enters a recession. Scenario 3, the bypass. The US aggressively deregulates its own mining sector. They open up federal lands in Nevada and Alaska to mining, ignoring environmental concerns, to become self-sufficient. This takes 5 to 10 years to bear fruit. In the interim, chaos reigns. I believe we are looking at a mix of scenario 2 and 3. Escalation in the short term, domestic pushes in the long term, which means the next 24 to 36 months are going to be volatile. You need to pay attention to the premiums on silver coins. That is your real inflation gauge. If spot is $30, but an eagle costs $45, the market is broken. And look at the tech sector earnings. If Apple or Tesla mentions supply chain constraints regarding raw materials in their next quarterly call, the Canada blockade is biting. This is the silent war. No bombs are dropping, no troops are marching. But the economic damage is real. Wealth transfers happen during these disruptions. Money moves from those who hold paper to those who hold resources, from the importers to the exporters, from the unprepared to the prepared. We are watching the revaluation of the elements. For 40 years, we thought intellectual property, software, brands, patents was the only thing that mattered. We forgot that you can't eat software and you can't build a car out of patents. You need stuff. You need atoms. Canada has the atoms. The US has the demand. The friction between those two realities is going to generate a lot of heat. If you are an investor, you have to look at the junior miners in safe jurisdictions. But you also have to look at the royalty companies, the ones who finance the mines. They get paid off the top. They are the safer play in a volatile market. And you have to watch the currency markets. The Canadian dollar usually rises with commodity prices. The US dollar is the reserve currency. But if the U.S. industrial base falters, the dollar could weaken. This is macroeconomics in action. It is complex, it is messy, and it is happening right now. I want to leave you with a thought experiment. Imagine a world without silver, no solar power, no electric cars, no advanced electronics. We go back to the 1950s technology. We can't do that. We won't do that, which means the price will do whatever it has to do to bring that metal to market. The invisible hand of the market will force a resolution, but it might be a painful one. The no from Canada was the first domino. We are just watching it fall. The next domino is the inventory depletion. The one after that is the price spike. The final domino is the restructuring of North American trade. Don't be the person who hears about this on the evening news 6 months from now when silver is already at all-time highs. You are hearing it now. You have the advantage of time. Use it. If you agree that critical minerals are the new oil, type silver is the new oil in the comments below. I want to see how many of you get the big picture. The disruption is here. The supply chain is cracking, and the opportunities are rare. We are going to keep tracking the situation closely. We are looking at the specific mines that might be nationalized and the U.S. companies most at risk. You do not want to miss our next deep dive. We are going to expose the hidden vulnerability in the uranium market that makes the silver shortage look like a picnic. Make sure you are subscribed and have notifications on. The world is changing fast. Stay ahead of the curve. See you in the next one.